make of the markets today edging lower? Is it the issue of Safaricom?
Thank you for having me on. Indeed, we cannot wish away the impact Safaricom has in the Kenyan stock market. As you said, it trades over half of the shares every day. So any moves that would affect the stock would affect the rest and the market in general. But looking keenly at the trends and the indices, we saw last week the indices, both of them, the all-share index and the 20-share index, gain for 3 days between Monday and Wednesday, only to drop on Thursday and Friday. This week again, we saw the index drop again yesterday. We've seen it drop again today. But I see this as a temporary thing. And if you look closely, Safaricom has actually picked up on the bounce. Yesterday closing at a low of 5 shillings and 10 cents. Today it should be having a weighted price of about 5 shillings and 30 cents. And I think this is more of a correction period than anything else, and we might not read too much into it.
Let's continue talking about Safaricom and what's happening concerning the rivalry from Zain. We're seeing Safaricom respond aggressively to the tariff cuts by Zain by halving their rates. What do markets experts expect to come out of this situation in terms of the ongoing price wars and the telecoms wars? Because with the backup of Bharti and a plan to invest in economies of scale in telecoms, it's going to be a rough ride for those who are existing players within the telecoms market.
Indeed, and you're right. And I think this comes with any liberalized economy. And you look at the telecommunications sector in Kenya, it's liberalized. We have the regulator, Commission of Kenya, have guidelines on how these market players should conduct themselves. All the same, I guess it's an open market. You compete fairly. And I think what we'll see is a loss of market share by Safaricom, because being at the top, they are the most vulnerable because they have everything to lose. Their offer may come as a temporary fix, but looking at the industry, we have Bharti as being the third largest telecommunications company in the world. They are backing up Zain in Kenya, and I don't think Zain will be going at a loss in the long run. We also have other players like Orange and UISA who have also eaten into Safaricom's market share, which I think will continue waning as time goes by.
All right, let's talk about some of the more active stocks in Kenyan equities today. Drummond Investment Bank and Standard Chartered were some that elicited some interest today. Why is that?
If you look at Drummond Investment Bank and look at the performance of the company, really good. The results were really good. Profits up 82%. Looking at the stocks today, they did go down, but only by a shilling, closed at 110 shillings average price from about 112. So I think it's a mild dip. The activity may come as positive investor confidence that the stock will continue going up, and indeed these financial sector stocks will go up. Looking at Standard Chartered Bank again, it shed some 8 shillings from 259 shillings yesterday. It closed at an average price of 251.52 today, and that is expected. The shares trade calm rights. And normally such a correction is expected under such corporate actions.
Okay, so those rights trading until the 7th of September. Let's talk about the losers today in the financial sector that you're particularly interested in. Barclays and Equity Bank, what's the story there?
We start with Barclays. Barclays did not have the best results compared to its peers. Having a profit before tax up only 5% was kind of meek compared to other banks which had double-digit growth. That may have affected it to some extent. But nonetheless, Barclays has been a strong player. It's also a blue chip in its own right. We also had them pay out an interim dividend of 75 cents. That may push the demand up as we near the close of its books. Right. And at 66 shillings, I think it's really well priced. And I think looking forward, the bank should do well.
Let's move over to the fixed income market. Today marks the close of this 9-year infrastructure bond sale at about 36 billion shillings. It's the largest bond sale in East Africa. The results will be released tomorrow. What are your expectations?
A positive outcome is expected, especially at a period where the bonds market hasn't been doing so well. I'm optimistic about this particular infrastructure bond, and we could even see an oversubscription. And I think we just wait and see, wait for the figures to roll in.
All right, and finally, I mean, we know that Kenya, being a major agricultural exporter, will be vulnerable to the futures grain market. This export ban for wheat coming out of Russia expected to have a negative impact on prices. Already we've seen prices move up significantly since June, but the impact starting to kick in Kenya with bread prices going up. What are the real threats to inflation, food inflation, under the current situation? And how can the shilling, which has been weakening a bit against the dollar, how can that mitigate against the importation of grains such as wheat?
This problem has come as a surprise, but I think the major factor here is the banning of exports from Russia. Russia, being the third largest exporter of wheat products, brings a supply problem. And in Kenya, we have now wheat products, especially bread, retailing at a higher price. We have a ton of wheat going for 30,000 shillings and a bag around 3,000 shillings. And looking forward, also looking at the Kenya shilling, we've seen it weaken against the dollar. But there's still an undertow, because once it weakens, we've also had players coming into the market, both into the equities market. We've also had a lot of exporters like Uganda, being our main target for exports, coming in now when the shilling is weakened. So I think it's a double-edged sword, and the effects may not last that long.